Let's welcome on board our experts and discuss what the market texture is looking like with them. We've got Nischal Maheshwari on the show. Kunal Bothra joins in on the technicals. And Nischal, I think the big news is what China is saying now. For the first time, official comments saying that they're open to talks if Trump shows some respect, saying they want Trump to rein in the cabinet members, show some consistency. They want US stocks to address concerns on Taiwan, sanctions. Seems like they're ready to sit across the table.
Afternoon, Aisha. Afternoon to all your viewers. I think the whole world wants that basically to show some restraint and sit on the table. I think most of the other countries have one way or the other basically already agreed to come to the table. I think the market world was waiting for China also to do it. I think that's a very positive step. Obviously, I think from the very beginning, most of us expected that these kind of tariffs would obviously not come through because I think this is a trade stopper. But some amount of negotiation is what I think even the Trump administration wanted. And I think that's what they are getting. So I think it's sort of a win-win kind of a situation for all the parties.
All right, seems like a win-win for all the parties. Well, of course, we are seeing a good move in the global markets as well for now when it comes to the future up move. But Kunal, help us with the levels that you are tracking at this point in time in the last half an hour or so, that sharp surge that we have seen. What do you make out of it, and what are the levels for Nifty and Bank Nifty?
I think now after this kind of a news flow, the drop in or the consistent drop in India VIX, we should be looking at the index retesting the previous swing highs of 23,800 mark, at least over the very near term. That should be a decent 400 points further upside for the Nifty. And I think the sector churn is also very, very interesting. You don't have the usual large cap, financials, the banking names which are moving up higher. You have the other stocks which start to show signs of strength. Even with the likes of Bajaj Finance, Finserv being under slight consolidative pressures, you have other stocks in the financial services pocket which is looking attractive. The PSU basket is the one where you're seeing a good amount of short covering. Underperforming sectors like auto, IT, etc. I think these stocks are also making a comeback. So I think all of that indicates that the market should be in for a near-term upside further. 23,800 is where I would peg the target for the index, say over the next one to 1.5 odd week.
And Kunal, what's intriguing is what's happening within banks, right? The underperformers are now playing catch up. Your IndusInd, Axis, Indian Bank, etc.
Yeah, Aisha, we were discussing this point I think a couple of days back that it's time for now the tier 2 banking names or the underperforming stocks within the performing sector which could make a comeback. So I think it's not a surprise to see stocks like IndusInd Bank, Axis Bank particularly, that stock is looking quite charged up. And these stocks are coming out after weeks and months of consolidation. For example, Axis Bank has now managed to break past about the 200 moving average after almost 3 or 4 months of remaining under pressure, and that too at a point where already the other outperformers like ICICI, HDFC, Kotak, they were already trading at 5% to 10% higher from the long-term moving averages. So which means now we should be getting into a zone where the catch-up from these so-called underperformers could be pretty much on the higher side. So I think it makes a lot of sense to now shift to slight high beta from from a trading portfolio perspective. And I think these names like IndusInd Bank, Axis Bank, IDFC First Bank, etc., and many of the PSU banking stocks, I think these stocks would also start to look very attractive for a swing upside of at least another 3 to 5%.
Nischal, is that your sense too? And does it make sense to now broaden your portfolio within banks and not just stick by with the leaders so far? Maybe a Kotak, ICICI and Axis, or rather HDFC?
I would actually want to still stick with the large caps basically because I think this quarter results are going to be pretty crucial. And definitely I think this may be the last quarter where the banks are going to have a difficult time. So that's why I believe basically it is good to stick with the larger banks and the quality banks. And let's see basically because we might keep on getting these kind of dips in the market. So let's wait it out. I still want to stick with the quality.
All right, stick with the quality. That's the call coming in when it comes to the financial space. And well, of course, after great move on some of the select large cap NBFC players, maybe it's time for the banking space, and even PSUs are participating in that party. But amidst this, as we have started the results season, let's put the spotlight on the IT space then, because numbers are awaited from the IT major Wipro as well as Infosys. But what is the street penciling in this time around when it comes to the Q4 earnings? Let's go across to my colleague Ansh, who's standing by with all the details. Ansh.
Well, for Q4, revenue in CC terms is expected to decline by 1%, whereas revenue in dollar terms is expected to go down by around 1.4% to $4,868 million. Now, this top line could get impacted from weak seasonality and discretionary spends, also by less number of working days. Also, if you talk about revenue in rupee terms, then that is actually expected to go up by around 1% to 42,198 crore. If you talk about margins, then that is expected to go down by around 80 basis points from 21.3% to 20.51%. And this is mainly due to partial wage hike. Talking about profit, that is expected to go down by around 1.4% to 6,710 crore. Now, if we talk about guidance for FY26, then here we can expect the guidance to be between 2 to 5% in CTC terms, whereas margin is expected to remain unchanged to 20 to 22%. Apart from these numbers, there are 5 key things to watch out for. First is management commentary on demand. Second is US and BFSI segment performance. Third is deal pipeline and Gen AI impact. Fourth is discretionary spend outlook. And fifth is headcount and attrition trends.
All right, so that was the street estimates when it comes to Infosys numbers. But what about Wipro, Ansh? The numbers slated for today, expecting the numbers to be just after the market closes. But help us understand, what is the street penciling in?
Company had guided for a constant currency growth of -1 to +1% for this quarter, and it is expected to be -0.6%, which is well within the guided range. Now, IT service revenue is expected to be at $2,597 million, which is down by 1.2% sequentially, and this is mainly because of weak in manufacturing and some hurdles in European region. However, if we talk about rupee terms, then total revenue is expected to rise by around 1.5% to 22,643 crore. Whereas if we talk about margin, then that is expected to drop by around 20 basis points from 17.5% to 17.3%. Not much, because the wage hike was already absorbed in Q3. If we talk about profit, that is seen at 3,290 crore, which is seeing a decline of 2.3%. Now, apart from this number, there are 4 key things to watch out for. First is commentary on Q1 FY26 guidance, especially the top line growth. Second is any insight on BFSI and discretionary spend. And third is a trend in headcount and attrition, whereas in fourth, we have an update on consulting business. So the bottom line here is that revenue is expected to be within its previous session guided range only, but the main focus here would be management guidance.
Well, that it sure would be. But Nischal, do you think it's time to go contra on IT just yet? Is all the negative already in the price? The stocks have fallen a good 25 to 30 odd percent, if not more, from their 52-week peaks already.
I think so, especially on the large caps, because I think the large caps have fallen quite a bit. But I think you have to be cautious. I think this current quarter is still, we have to as yet wait and see how much, what kind of commentary they come up by. So what we have to, why this caution? Because I think even now the next 2 quarters are not going to be great for all these companies, because with this kind of tariff discussion happening, nothing is going to come out early. So I think decisions are going to get deferred. So I think the second half of next year is what we are penciling in, that there is going to be more clarity. So wait for the time being. Basically, there is no rush in the market.
All right, that's the take coming in on the IT space. But other than that, let's also mark within financials, maybe it's IndusInd Bank that is leading all the way, because just after a 7% jump yesterday, the stock has been building on to those gains and is now sitting with a uptick of almost 8%. But Kunal, help us with a chart check on this one. The stock is now nearing those 800 levels for itself. But what do you make out of it? Is this it with the last 2 days super move that is coming in on IndusInd Bank, or do you believe there's more headroom for this stock to go up?
Yeah, there's more room for the stock to move up higher, and I think these kind of moves, they generally established at a, the major panic which had happened for IndusInd Bank almost like a month back. That major panic is now settled in, and traders, investors are looking at this as an opportunity, for investing or going long to the stock. My sense is that this move after the last 2-3 days, and especially today's move where the price action is a lot more stronger, the volumes are also a tad bit higher than what has been over the last couple of days, indicates that we've seen the first step of a buying happening for IndusInd Bank. Now, for these kind of stocks, if the news flow starts to improve gradually, then we see more confidence brewing into the stock price. That's a process, and that takes a lot of time. So I believe that this kind of an up move over the short term indicates that the longer term charts for IndusInd Bank would start to become a lot more positive. Any kind of news flow which adds on to the positive side for the stock price, I think could boost the momentum for the stock in the near term.
If you like this video, then like, share and subscribe to ET Now.